And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, September 27th, 2021. As I hinted yesterday during our update that the market or that the S&P could go up and right into that resistance point, and that level could be totally rejected by the market, and that would give us enough support and confidence to mark that spot as the completion point for a C wave up. And I've changed the count just a little bit. As I also alluded to, I was going to take a second view. Oh, I forgot to finish this. A second view at the count because I really felt that these were all going to be five-wave structures down. And so I wasn't really pleased with an A and a B on an intermediate level. And so I did go back on both the S&P and the Dow, excuse me, and the NASDAQ. And I did find where I can count 5 down and label it intermediate 1, and then a 3-wave rally up and intermediate 2. I'm much more comfortable with that count rather than an A and a B and then looking for a C wave down. We're still going to get a 5-wave structure down, and it's going to be a 3rd wave instead of a C. And both resemble each other almost tick for tick. So we're still going to get the same result out of this. It's just changing the degree that we'll be finishing once this 3rd wave, as I'm now calling it, would be put into place. Now, I will add that I am keeping the A and the B as the alternate, because that still might be the case. And even though I can count 5 and I can label it 1, it could still be A, because A can be 5 waves. The B then fits perfectly. So this would be a 5-wave A wave, a 3-wave B wave, and then we get another 5 waves down. So we're still, up until that point, we're still going to be expecting the same type of wave, whether it's a C or whether it's a wave 3. They have exactly the same characteristics. We start to see some acceleration. We have a point of recognition in the middle of it. So both being 5-wave structures, they just kind of follow almost hand in hand with one another in terms of characteristics and what we would look for. So going back to the fact that this is going to be a 5-wave structure down, the market may have completed this 1st wave down. So whether it's one of C or one of 3, makes no difference. But the 1st wave down may have completed right at this point. And now I'm going to try that one more time to see if I can't get it open. So it could have been 1, 2, and then a 3 and a 4 and a 5. And this is an A, B, C with a very small C wave failure. So it's kind of presenting a little bit of a challenge as to exactly what's coming up next. We got about 3 minutes and then we'll start in the Globex. So we'll see how they want to bring this on. Right now, it is being bid up just a little bit, about 31.25. And so we'll see. We'll see how this all pans out, because we have the possibility that this is A, B, and then we get another C wave up, and they do come up above 44, 46.50. But I do believe that this still is going to be the top of that ABC structure up, that rebound rally that we saw. I think that's done. And now we're going to work our way lower in a 5-wave decline. Now, whether this is just 1, or if it's just 3 and this is a 4, and then we get a 5, and then we get another 3 waves up, we'll have to wait and see. But the underlying current now, I think, is going to shift. Again, what held it up today was basically the Dow and the Russell. The Russell, both of those just caught fire this morning and just rallied and rallied and rallied. And that pulled the S&P up. I think it pulled the NASDAQ up a little bit too. But both continue to get dragged lower as the market when the NASDAQ just continued to decline, found more sellers again and again and again rounded to sellers. And this is going to be interesting because if we just take a quick peek, we have the NASDAQ looking like it's going to open down 10 from the close, where the S&P looks like it might open up 1 3/4, maybe 2. So it gets a little bit interesting. So what my expectations are as follows. I do expect that that the rallies should be more on the shallow side in terms of, I don't think we're going to start bouncing and heading up towards that high. Since I do operate on the matter that all things are possible within our markets, I would not be expecting this. Now we can run quick Fibonacci on this if we were still within a small, okay, let me do that, a small bounce higher, then, and this completed a 5-wave structure down, then we're going to take it from that, run it down to there, and you can see it really came up to the 382. So what we have above that is 44.48 and then 44.54. And so we have got a 10-point zone that it could kind of rally into if it chooses to find some true strength and begin to push higher. But I think that that would be contained between 44.48 and 44.58. And I would not be expecting it to go really much beyond 44.48 at this stage. Now, before we begin to see that third wave down. So I am going to take that Fibonacci retracement off, and we're going to take a look here to what we have coming down. The 200-day moving average, and this is a 30-minute, did hold today. Came down, got close a couple of times, and now still we're basically within 3 points of, so yeah, about 3, but, which sits at 44.25. That's where the 200-day moving average is based on the 30-minute chart. If that is broken, that's really going to start to show us some additional weakness. Now we broke cleanly below the 50. They came up and tested it a couple times. The 20 now angling down. After, at certain points during the day, we did have an angling 20, and it was angling up, but that was on my lower time frame charts. And that helped to provide a little bit of support for some rallies that we had. But here on our 30-minute, it just kept being resistance. And now it is angling lower. The 50 is beginning to turn lower. So this, again, pretty flat, which kind of resembles what is going on right here. So if it breaks it, it's going to show us a little bit more weakness in the market, and that's on the 30-minute chart. More importantly, as I've been discussing, I really keep an eye on it on the hourly and the daily. So if I kind of come over to the daily and we just take a review of where our moving averages are, then we're looking that right now it did break and close below the 20, so that it was above the 20, hung out there on Friday, and on today, it did break below it. We saw the weakness, and it closed below it. So the market's task, if it intends to hold higher levels, it needs to rally back above that 20, the daily 20. So the picture's beginning to tilt negative again. And now what would give us additional strength towards the weak side. So I hate to put those two words together, but if the market were to break and then again close below the 50, which is at 44.17, then we're getting into some stronger weakness that's being prevalent in the market. And again, we should again see some stronger acceleration as the market continues to move lower. Now, going back down to that hourly chart and see if we can open it up this time. Come on, guys. Give me a little bit of a break. Come on. I don't know why it won't do it. There. So again, here's the 200 on the hourly. sitting at 44.27. So we're really very close. So if it's already broken below and closed below the 50, and it's closed below the 20. So what now needs to happen to really give us this downward momentum, a good kick to the downside, would be for the 20 and the 50 to continue to head lower, break below the 200. As the market breaks below the 200, we'll pull those moving averages down. And when they're all now on an hourly basis, angling lower, pointing lower, then we should begin to see some stronger weakness pushing the market lower. We have support at 44.11, which we did see on Friday. And then we have not even gotten close since. In fact, the market pretty much held above that 200-day moving average all day. Came down, test, test, test. Tested it 3 times, 4 times, and looked like we were almost going to get to make it 5. So I would suspect that we're going to break it, that the market will eventually break it. And I think they're going to find too much difficulty in trying to pull this down. Although the NASDAQ just kind of just opened down, and of course they raced into bottom. Very typical NASDAQ. But in any case, this is our next support level. A break there, we do going to have price support at 43.95. We're going to have it at 4,400 simply because it's the round number. But I do anticipate that that's going to be broken. And I would actually ultimately, whether this is a C wave or whether this is wave 3, both would be expected to come down and break below the existing low from the 20th of September. And that was at 4293.75. So let's just call it 4294. Now, just below that, we have, which could be strong support at 4292 or 93. Ultimately, what I would be expecting is that this third wave would be equal to wave 1 at 42.17. I'm not looking for it to equal it. I would be looking for it to break it and come down to at least 1.618. I don't want it to be as long as wave 1. If, again, we're in a 5-wave decline from the all-time highs, if we're in a 5-wave decline, waves 1, 3, and 5 compete against one another. Wave 3 is often within that impulse move, is the longest and the strongest. Does not have to be, but what it cannot be is the shortest. So I don't really want to see it be equal to 1. I would like it to already exceed 1, which opens it up. If it does not extend as much as I believe it will, then at least takes the bearing off of it that it could be the shortest wave. So I don't want to be confronting that as we move forward, as the decline would continue. So my basis for that is that it's the third, it's normally the longest and the strongest. And that once that wave 3 of 3 begins, then we're going to get to that point of recognition again. And if we get to that point of recognition, that's when we should see some additional acceleration, as once again, as I've described in the past, when you possibly could have a line in the sand sort of line that if the market drops below, traders are going to have to make position adjustments, either from long to flip out of longs and go short again, or they're making adjustments for the downside. And that's usually what the point of recognition within the current position that the market is in. That again signals, oh, we're going down. We're not going to continue to rally. We're going to continue to go down. And that would add some significant acceleration. Now, wave 3 of 3, I think, can get down to this 43.14, do a little bounce, and then come down to that secondary level, which is quite a bit lower. Actually, wave 3 should come all the way down to here, and then get a little rally, and then we finish it with a move down to here.
or it could be larger, but we'll track it as it unfolds. Right now, I can really put some minimal things out that absolute bare bottom minimum would be that this wave, this decline should reach 4217.50 or in that area as a minimum. That actually does break this low and could set the stage for a rally. In fact, I would be expecting it, but I do believe that it'll be it'll be shallow. So maybe this is like a 1, a 2, and a 3 brings it to here, we get a 4, and then the 5 brings it down to there, or into this area before the whole thing is complete. So again, from this stage, I'm not looking for extensive bounces higher. As I said before, we possibly could get up to 44.50, maybe as high as 44.60. I think we had some resistance in there. So we have here at the high, 46 to 50, and then 60. I'm not looking for 60. I will trade it should it occur, but it's not really on my list of possibilities. I mean, it's there, but I don't think that the market will go up there before it goes down. So I think, yes, we have the possibility of just maybe getting about 44, 46. If not, then we can say that this little bounce is complete right there. And if that's the case, then we continue to drop. Or there's a possibility this is 1, 2, that's 3, and now we're just doing a small 4. And in fact, this 4 could be a little triangle. If I break it down to the 30-minute, I could break it down one more time to the 15-minute. And let's take a look, open that up. Why is that not? There you go, thank you. This is the low, that's the A, that's the B, this is the C, this is the D. We get a little E up, should not exceed that, maybe just the spike above that 44, 43 number, and then thrust lower as it goes into a little fifth wave to complete this first 5 down off of that top that we had at 44.72 in Globex. So we can look at it 2 ways. We can look at that the first 5 down are complete. This is, so we could label that 1 of 3. This could be 2 of 3. But if not, then this is just 3 waves. And this is the 4th, and the 4th may be forming a triangle. And if it is, I expect to go up here, and then it will just thrust lower as we begin that next leg down. And if it's a 4th wave, then I'm not looking for a whole lot, maybe down to 44.11, 44.12. We get another rally, three wave rally up, and then we begin that larger 3 of 3 move. And that's where I'm going to leave this for right now. Trading wasn't the best today, but it was good enough to make money. And we had some really decent moves. First off, right pretty much quickly in the morning. And these were good. This was a good decline. And then that was tradable. And again, using the shorter time frames, the 1, the 2, and the 5-minute chart. There were plenty of entries and there were plenty of exits to make money on. But then it kind of got slow. And then it just kind of got stuck. We did get some decent moves in there, but nothing really to write home about. And if you weren't looking and paying attention, you missed. In any case, this is where I'm going to leave it. I'm just going to continue to encourage traders to use your moving averages to guide you, excuse me, to guide your trades, and to also help you to surmise where's the market and how severe is this going to get. If it trades between the 50 and the 200, it's just going to go sideways. And you can see it. Got a flat top, got a flat bottom. Just going to go sideways. And that's why I think it could be a triangle. Now the triangle will resolve by doing one more little up wave, a 3-wave, right? This is the D, and this is going to be the E. Gets up to about here, could get up to here, more likely up to 41, and then thrust out of the triangle and it'll go the distance. And the distance right now is about 20 points. And so then I would expect it to thrust out of the triangle. And then depending on where it stops, if it stopped here, then I'm looking for 21 and it's going to break below that. But then it's likely to recapture it. So a quick break and then quick rally back. So the trick, or not the trick, but the importance would be is that the market drops below and closes below. So if the bar can close below the 200 moving average, then it's going to produce some weakness in the market. That's where I'm going to leave it. Next update tomorrow, the 28th.